GIC, Singapore's sovereign wealth fund, has divested its 17.5% stake in the Bluewater Shopping Centre, the UK's fifth-largest mall, to London-based developer and property investor Land Securities Group, Landsec, for £120 million, equivalent to approximately $152 million. This significant transaction, reported by Mingtian, represents a substantial financial loss for GIC, marking a 62% decline from its initial investment value nearly 2 decades ago. In 2005, GIC acquired this stake in Bluewater from Prudential's property investment unit, now known as M&G Real Estate, for £318 million. At the time, this purchase valued the mall at an impressive £1.8 billion. However, the recent sale has valued the mall at £686 million, highlighting a notable depreciation in value over the years. In US dollars, this translates to a 74% markdown. With this acquisition, Landsec has increased its stake in Bluewater from 48.75% to 66.25%, thereby gaining controlling interest over the property. Bruce Finley, managing director of retail at Landsec, emphasized that this transaction underscores their strategic capability to create value through prime investments in major retail destinations with attractive return profiles. He highlighted Bluewater as one of the UK's top retail destinations, integral to their strategy of building strong relationships with key brands. Located 21.5 miles southeast of central London in Kent, Bluewater spans 1.8 million square feet across 3 levels and occupies a 240-acre site. Established in 1999, this expansive mall hosts over 300 stores, along with numerous food and beverage outlets and entertainment venues, attracting more than 27 million visitors annually. Based on the mall's performance over the 12 months ending in March, Landsec anticipates that the acquisition will enhance its net rental income by £10.3 million annually. GIC's involvement with Bluewater was part of a broader UK property acquisition strategy before the 2008 financial crisis. In 2005, GIC partnered with Lehman Brothers Real Estate Partners and Canadian firm Realstar Asset Management to acquire a portfolio of 73 UK hotels from Intercontinental Hotel Group for £1 billion. 2 years later, in 2007, they purchased the Merrill Lynch Financial Centre office campus in London for £480 million. Landsec's engagement with Bluewater dates back to 2014 when it acquired a 30% stake in the mall from Lendlease for £656 million, valuing the property at £2.2 billion. Additionally, Landsec paid £40 million for full asset management rights and 110 acres of surrounding land. Post-transaction, Lendlease retained a 25% share, while GIC and M&G Real Estate each held 17.5%. Other stakeholders included Hermes Investment Management with 7.5% and Aberdeen Asset Management, now a Burton, with 2.5%. In 2017, Hermes sold its 7.5% stake to Royal London for £155 million. By 2021, Landsec further consolidated its position by acquiring Lendlease's remaining 25% stake for £172 million, which valued the mall at £688 million. As part of this deal, Landsec sold 6.25% of Lendlease's shareholding to M&G Real Estate, increasing M&G's interest to 23.75%. GIC's overall investment strategy has traditionally focused on international diversification. In a parliamentary question filed on July 2, Mr. Leong Ng-Hwa, MP for Bukit Panjang SMC, queried whether the government would review its investment mandates with GIC to consider directing part of its investments to securities listed on the Singapore Exchange. This suggestion aimed to potentially revitalize the local stock exchange. In response, Second Minister for Finance Chee Hong Tat stated that while the government continues to seek ways to enhance the attractiveness of the local equity market, directing GIC to invest specifically in locally listed companies is not considered a viable solution. He emphasized that GIC must maintain a professional investment approach aimed at achieving substantial long-term returns for Singapore. Moreover, to preserve the international purchasing power of the country's reserves, especially during crises. GIC's strategy involves investing in a globally diversified portfolio. We would love to hear your thoughts on this major financial move by GIC and its impact on both local and international investment landscapes. Do you think this was a strategic decision by GIC, or could there have been better alternatives? Please share your opinions in the comments below. Don't forget to like, share, and subscribe to our channel, 2230, for more insightful news coverage.